Certainly a pleasure to be here and talk on the topic that's very near and dear to my heart. I got started, as Dave said, in 1975, and back then we just talked about energy efficiency and water efficiency and so forth. It wasn't until the mid-'80s we started really paying attention to the other facets of green or sustainability, because we said, you know, if we're telling people to tighten up their homes, we ought to be paying attention to the indoor air quality and some other things of that nature. So we studied radon gas and we studied combustion byproducts and all those things. And so our new home programs at that time took a turn that became more holistic at that point. So we looked at energy and water and air quality and all those kind of things. But today I want to talk to you a little bit about sustainability, decision making, and sustainable economics and sustainable investing. And so when I think about all those things, you know, really it all comes back to having a holistic view of how we make decisions. So when we talk about sustainability, we have to define some terms, and sustainability as a term has been around for a while, since the 80s. There's a lot of different definitions out there. One of the ones that I like the most is the simplest one, is the capacity to endure. Sustainable organizations, sustainable ecosystems, things that endure. And, you know, when we talk about sustainability, often we talk about it from an ecological perspective, we talk about it from a human perspective, and also an organizational perspective. I like to be able to frame it in those three areas, because really it's really about all these things, and about all these things working together holistically, and holistic is the key. In ecosystems, you know, a sustainable ecosystem, you know, is one that obviously lives in spite of the things, environments around it. And it just continues to grow and evolve and mature over time. And the only time it doesn't is if we interrupt those kind of things, and as we're seeing in the Gulf this week. For humans, you know, potential to endure, if we look at what we have here, we look about our ability to endure as a species is really based on our ecosystems and how well we interact with those and not adversely impact those. And then from an organizational perspective, if the organization is to be sustainable, it has to be responsive to its environment. And when you talk about organizations, if you look at for-profit organizations, if you look at products from organizations like Procter & Gamble, they're looking at sustainable product lines. Well, they're trying to reinvent themselves all the time to be sustainable from a financial perspective. And so for them to be sustainable financially, they have to be responsive to the environment. So all these things get back to the environment and what we define as the environment. But sustainability exists at all these levels, so it's important that we think about it at all these levels. And the implications are, if we disrupt the cycles, then we're going to have some adverse circumstances. And of course, the most extreme adverse circumstance is that whatever it is, the organization or the ecosystem or the company or the product, it will not fail. You either have to adapt to your environment or you will fail, essentially. So let's talk about some of the acronyms for sustainability. There's a lot of them out there, and since we'll be talking about really sustainable investing and decision-making and economics, I want to talk about some of those terms that you see typically associated with that. First, we have CSR, or corporate social responsibility. This term's been around for a while, and this really is was the beginning of what we call sustainable investing today. It was those corporations that were more socially responsible. And if you look back over time, you see that there's a particular group of organizations that focused on doing the right thing, and that became kind of a niche from the investment perspective. The next one up there is SRI, or Sustainably Responsible Investing, and really that's what we're going to try and focus on towards the end of my presentation. And the next one is triple bottom line, or 3 Ps, or people, planet, and profits. This is what a lot of organizations today are looking at in terms of how do they manage their companies. And a truly sustainable organization, one that's responsive to the environment, is to have kind of a triple bottom line approach that looks at people, planet, and profits. Of course, it has to be profitable to be financially viable, but if it's smart, and the new organizations, a lot of them are out there are doing this, they're looking at the impacts on people, both internally and externally. Are they running the organization ethically? and then the planet. What are they doing? What kind of impacts are they having on the planet? So all these are sometimes referred to as the 3 Ps, so you'll hear a lot of this terminology. Another one, there's a whole movement out here called LOHAS. LOHAS stands for Lifestyles of Health and Sustainability. They're having their 15th annual conference, and these are the people that deal with green products, okay? And these are more retail-type companies that deal with products that we sometimes see on the shelves as being advertised as green. Well, it's a whole industry now. They've been doing this for a number of years. And then there's a whole series of categories that we look at when we talk about sustainable companies, and you can see the list up there. I'm not going to read them to you. The ones that are really interesting to me are the ones at the bottom, some of the emerging markets. And this is where some of the opportunities are for investors moving forward. And then we have sustainable organizations. Sustainable organizations, already mentioned the 3 Ps. There's a number of companies out there that are doing a real good job with this. If you look down at the bottom of my slide, you see there's a number of mainstream companies now that are really taking a good hard look at running their organization using a triple bottom line approach. They see the benefits of being a sustainable company and doing the right thing. Perfect example to me is GE with their Eco-Imagination program. They sell locomotives and jet engines and all this kind of stuff, and they make lots of profits off this. But what they're differentiating themselves today as having the best products in those lines that are much more efficient than conventional, that are easier on the environment. So this is the way they're differentiating themselves. A number of these mainstream companies are really remaking themselves. Walmart's a perfect example. They really get the value of sustainability today because they realize that everything that they do to be a green or sustainable company, even though they may say it's for the right, they're doing it because it's the right thing to do, it all contributes to the bottom line. They're reducing their fleet usage by investing millions of dollars in improving the performance of their trucks, the second largest fleet in America. They're investing in their buildings to reduce their energy footprint, and they're investing in their supply chain to reduce their waste stream. All those things are the right thing to do, but they also contribute to the bottom line. So they get it from a business perspective and also from a sustainability perspective. Cooperative Bank of England decided a number of years ago they were not going to invest in organizations that don't concur with their ethics policy, so they decline working with businesses that don't have ethical policies or that are involved in munitions or alcohol or tobacco and all those kind of things. They've turned down a lot of investments, and at the same time, they've become more profitable. Philips Electronics with compact fluorescent light bulbs, HP. Those are kind of the mainstream companies, and then you have the deep green companies that are really focused on doing things within the green arena. Zipcar, which is the car that you use for a couple of hours at a time, that's located in a lot of big cities now. And on down the line, you can see there's a big list of the deep green companies. Next, we have sustainable decision making. So now you've seen, sustainability from an ecological perspective, from the personal perspective a little bit. I forgot to mention that really the biggest opportunity for sustainability is really at the personal level, because if we green our homes, we get a much better return on investment than many other investments. But we'll get to that in just a few minutes. Okay, sustainable decision making. How do we do this? It's really, again, holistic, looking at things holistically and looking at and understanding what decision criteria you use to make appropriate decisions going forward. And these are some of the typical criteria you'll see, for sustainability. I have to watch my time because otherwise I don't want to cut into my co-speaker's time here, so I'll be cautious of that. And then with any decision, you see there's all kinds of trade-offs. So we have to weigh things to make sure that we understand what the trade-offs are and what the value is and where the greatest value is for us, whether it's at personal level, personal decisions, or organizational level, or from an investment level. We want to understand these things holistically. And then there's always trade-offs in any decisions. And here's one set of trade-offs. If you can't read that in the back of the room, the couple's in bed and she says, "I told you already, incandescents use too much energy and CFLs contain mercury. That's why we switched to torches. So, I mean, that's obviously a trade-off, okay? Now, the good news is in Jacksonville, we have a CFL recycling program, so that trade-off is one you don't have to worry about. But even if we didn't, the trade-off in this case is good because the net mercury by using CFLs is actually lower if you consider the total emissions from the power plants as well. But it's really all about trade-offs and decision-making and making informed decisions. And all of us do that at all levels, whether it's personal level or if it's with your portfolio or if it's with your own organization. So here's a sample decision matrix where you might weigh some of these different decisions and associate some value, low, medium, high, to these different decision criteria. Each of us, whether it's personally or as an investor or if we're running a business or organization, we have to look at all these things to make informed decisions. So it's important that we consider these things holistically as we move forward. Now, if we move from decision making to economics, I borrowed some of this information from one of my co-presenters, and I appreciate that, Elizabeth. Some of this is your material here. But talk about sustainability. The challenge for sustainable economics is to ensure that whatever we do economically doesn't have that negative impact on the environment. And this can be done by using strategies and technologies that don't negatively impact the environment. And that's the key, is looking at these things and understanding those things that don't negatively impact the environment. In fact, in some cases, there are a lot of things that can have a positive impact on the environment. We just have to look at these things creatively. Now let's talk about the investing perspective. That's what I was asked to talk about, so we'll talk a little bit about that. From an investment perspective, what are some things to look at? Well, the first thing I'd like to suggest is that all of us look at our homes, because for many of us, our home is our biggest investment, and for many of us, depending on how old your home is, the return on investment from investing in your home in terms of deferring any energy costs could be much, much higher than conventional investment. And I'll give you a perfect example. If you have a pre-1980 home, for example, you could have paybacks of less than a year or even a few months by doing some things like high efficiency shower heads, or even the dual flush toilet over here, 3-year or less payback. I mean, that's a 30% return on your money right there. So those are some great investments. Now, if you have a home that's more current than that, then you're not going to have the same kind of return, so you need to look at some other things that you may be able to do there. And each home's could be different. And so, but I challenge each of you to look at the checklist that we have at the JEA table and see if you've done many or most of those things to ensure that you're really reducing those costs moving forward. So the home is obviously a great investment, but then oftentimes the organization has opportunities, whether it's a business or institution. But then personally, we all have investment opportunities within our own portfolios, whether you're an individual investor, if you have a 401A, or if you have any mutual funds, or if you're into stocks and investing, there's opportunities there in the sustainability area as well. We're going to talk a little bit about what those are. It's interesting to note that the whole area of sustainable investment really has grown, and over the last couple of years, we've seen some significant growth. And today, over 11% of total assets are in sustainable investment categories. And this has grown faster than the overall market of total assets, equities that are under investment. And then what's driving that, if we look at some of the drivers there, some of the big drivers are government policies, change in the marketplace. All these things are beginning to drive it, but also companies are beginning to look at triple bottom line opportunities. And these are all things that are driving investments in more sustainable areas. And corporations are, in fact, there was a book written called Green to Gold. Organizations are starting to see the gold in green, okay? And this Daniel Esty from Yale and another, his co-author, wrote the book Green to Gold, and it's about just that, how these for-profit organizations are realizing that Sustainability makes so much sense from a business perspective because a lot of it's driving cost out of the business. In many cases, it's increasing revenue streams from other products and services that they can provide to the marketplace. Okay, so getting started with sustainable investing. The first thing you want to do, well, first of all, I have to have disclose that I am not a certified financial planner. Okay, that's my disclosure. So I would say consult your certified financial planner, go to your credit union, or use your investment advisor to validate this information. Like always, as a good consumer, you want to trust but verify. Okay, that's my favorite Ronald Reagan quote, the only one that I ever use, is trust but verify. As a consumer, that's so very important in all cases. So there's a lot of ways you can invest in sustainable companies. There's some things you could do. There's screens to look at. There's what they call positive screens to look for things that are of interest to you. Are these renewable energy companies, or are they companies that invest in women, or are they companies that invest in good workforce practices? Or negative screens, are they companies that invest in tobacco, alcohol, firearms, or things that you don't like? So there's those two types of screens to look at. And then there's other types of focus areas within the sustainable investing: faith, community, ethical practices, and of course environmental. And then I'm going to skip over the shareholder advocacy part in the community investing just because I don't want to take up too much time on that. Okay, so moving right along. Now, myths versus facts. A lot of people think, and this I got right off of the Green Money Journal has some great resources, and it's one of the things that if you're looking at sustainable investing would be a great resource for you. First is that sustainable investing is a fad or gimmick. Well, no, it's here to stay because, as I stated earlier, over 11% of assets are now involved in sustainable investing. And then it's the same as ethical or socially responsible investing, and we already talked a little bit about that. There's a lot of different facets to it. There's that facet, but there's the energy facet, there's the water facet, there's the women facet, small business facet. There's many different facets to sustainable investing. And then green initiatives are supported solely by private interest groups. Well, that's totally wrong because governments all over the world are investing huge amount of dollars in sustainability initiatives. The funds, the government stimulus funds has Department of Energy grants, $4.2 billion for a lot of different energy initiatives. There's a lot of others out there as well. So there's a lot of government support for it, not in only dollars, but also policy. So it's an area where we're going to see a lot of growth on. And let's see, advisors and investors aren't buying into the trend. Well, the facts just don't support that particular myth. As you can see from some of the data up there, a lot of people are moving into this arena just because of the growth in the area. A lot of people are seeing the benefits in sustainable investing. Now let's talk about performance a little bit, because really as an investor, if you're investing for your retirement, performance is of utmost importance to you. And you want to be able to, the nice thing to be able to do is to invest sustainably, but also get a really good return on your money. And so it's interesting to me, I started getting involved in this a couple of years ago, and I started diversifying my personal portfolio to try and add some of these asset categories to my portfolio. And so when I started looking around, I found out, yes, it is true that some of these sustainable funds are actually outperforming the market. And when I looked at the data, 2/3 of the funds were outperforming the general market. So that was a pretty good sign to me that these funds, many of these funds were outperforming the market. Now the key is to make sure that you're investing the 2/3 that are outperforming the market, not that the 1/3 that's underperforming the market. And of course, that's a challenge we all have as investors, to try and ensure that we get the best return on our money and minimize our risks going forward. Okay, so there's not necessarily a penalty from sustainable investing. In fact, there can be great returns, as we can see here. And then mutual funds, really the best way for investors to get going in sustainability investing. Just like any other investment, you want to try and diversify your portfolios. Diversification helps you manage risk, and that's a key thing for all of us because we understand that we are risky in difficult economic times. So consult your financial advisor and make sure that you have a proper diversification strategy. But for me personally, I'm looking at a certain portion of my portfolio in equities, a certain portion in bonds. I'm taking a portion of that equity part of my portfolio and investing in sustainability funds. And as we've stated before, there's a lot of different varieties: environmental, there's the corporate social responsibility, the faith-based, and so on and so forth. There's even one fund that's dedicated to companies that on the Fortune 100 list of companies that are best to work for, good working environment type companies. And that's just some examples of some of the things I have in my personal portfolio. Calvert, for example, is one mutual fund family that has a lot of these specialized investments. But I challenge you to look around, see what's out there. There's many of them out there to look at and to consider going forward. And then, again, opportunities, they exist at all levels. Whether you're at home, your business, your institution, investing and so forth. What do they lead to? I mean, cost reduction. You could see the cost reduction list is up there. Sustainable investing is about driving cost out of your business, your home, your institution, whatever it is. And when you do that, you're driving waste out of your business and reducing environmental footprint. At the same time, you're reducing your risk, okay? Because you're reducing all your waste, your hazardous waste as well as your non-hazardous waste. And if you're a for-profit company or a service company, you can be adding revenues from new product sales or for services. So what are the key takeaways here? Key takeaways are holistic decision making requires really all of us to look at the big picture. Sustainability economics are for the long term. And the priorities I would suggest for most folks are to look at your home first, your business, your institution, your school, your church, whatever, and then look at your own portfolio and see where there may be some opportunities. You may not want to do anything specifically in terms of sustainability investing because a lot of the mainstream companies are moving towards sustainability. But if you're interested, it's something for you to think about and to consider and to research. Establish your goals, set your plans, monitor and update your plan. Just like anything else you would do, have a systematic approach to doing it. And so consider starting with a small portion of your funds, use a professional investment advisor, research, get informed, verify your data, and then you can act and make informed decisions. And I do have some resources that I'd be happy to share with anybody. I have a few copies of this presentation, or I can email it to anybody who is interested. And of course, the traditional resources I didn't list, but Morningstar is a great resource for investors, and there's a lot of other great resources for traditional investing as well. So with that, I give the floor back to David.